Now that we have learned about the different components of the accounting equation, assets, liabilities, and owner's equity, we're going to now use the accounting equation to record a variety of business transactions. So I'm going to use Microsoft Excel and record these 11 transactions onto the accounting equation. Okay, let's get started. The first transaction says that the owner invested $36,000 in cash to begin the business. Your job is to analyze this transaction, meaning determine which accounts are involved in this transaction, determine if the accounts are increasing or decreasing, and what is the account classification, meaning is the account an asset account, a liability account, or does it fall up under owner's equity? So whenever the owner makes an investment, you should always think capital account. That amount goes to the owner's capital account. And because they invested cash, the other account involved would be the actual cash account. So to record this first transaction for number one, label my transactions over here, make that a little bigger. There we go. So to record this first transaction, and the amount was $36,000, the cash account increased by $36,000. Cash fall up under the asset category, and the owner's capital account also increased by $36,000. Every business transaction must always balance, meaning that if on the left-hand side, asset side increased by $36,000, then I must indicate what happened on the right-hand side. In this case, the capital account also increased by $36,000. Next transaction, purchase equipment for $16,000 in cash. So again, you want to think about which accounts are involved in this transaction. We bought equipment and we spent cash. Okay? So now ask yourself, did the equipment account increase or decrease? Because you purchased equipment, the equipment account increased. Because you're spending cash, the cash account decreased. So for this example, you have two asset accounts, one being cash, the other being equipment. One asset equipment account increased by $16,000, while the other asset account cash decreased by $16,000. So for the second transaction, I'm going to put minus $16,000 under my cash account, and I'm going to put plus $16,000 under my equipment account. Now notice that in this situation, it did not impact the right-hand side of the account equation. That's because the two asset accounts offset one another. One asset account increased by $16,000, while the other account decreased by $16,000. Okay? We purchased $6,000 of additional equipment, but this time it says on credit, meaning that we received the equipment, but we haven't paid for the equipment. We owe for the actual equipment. We now have a debt. Remember, in accounting, the term debts are referred to as being liabilities. So when I record this next transaction, number three, and notice that I'm recording each transaction on the appropriate line. For number three, my equipment account is going to increase by $6,000, but now my liabilities, my accounts payable account, will also increase by $6,000 because we now owe $6,000 to our creditor. Okay? Do a little formatting here to make this look a little better. Put my equal sign down here. There we go. So assets equal liabilities plus owner's equity. Want some more? Okay. Number four said we paid $3,000 in cash to creditors. So for number 3, we owe our creditors $6,000. We're paying them $3,000 for number 4. So again, you want to ask yourself, which accounts will be involved in this transaction? Well, I paid $3,000 in cash, so I know my cash account will be involved. But who am I paying it to? I'm paying it to a creditor, meaning that my liabilities are now going to decrease, and my cash is also going to decrease. So I'm going to put minus $3,000 in my cash account and minus $3,000 in accounts payable, because now I have less cash, but I also owe less to my creditors. Again, every transaction must be in balance. So whatever you do on the left-hand side for the assets, unless it involves 2 asset accounts, then you must do the same thing on the right-hand side of the equation. Let's keep going. Number 5 says the owner made an additional investment of $6,000 in cash. We know from number 1, when the owner makes an investment, it'll increase the cash account, in this case by $6,000, and also increase the capital account, in this case by $6,000. How you doing so far? Feeling pretty good? Okay. We'll do a few more. Then I want to get to some totals. I want to make sure that I can see all of these different categories. But number 6, now we perform services for $4,200 in cash. Whenever you perform a service, that is known as earning revenue. Again, whenever you perform a service, that means you are now earning revenue. So in this case, we perform services and receiving cash $4,200. So my cash account increased by $4,200, and my revenue account increased by $4,200. Number 7 says perform services for $3,650 on account. Now we ask the question, what does that mean? It means that we have performed a service, however, they have not paid us yet. They owe us money. Money is owed to the actual business. So in accounting, we have an account title called Accounts Receivable. Again, the title is called Accounts Receivable. Account receivable represents money that's owed to the actual business. It's an asset because it is something of value that is owned or controlled by the business organization. So in this case, we provided services with a total value of $3,650 on account. So my account receivable account will increase by $3,650, and my revenue account will increase by $3,650. Point of clarity. In accounting, we recognize revenue when it has been earned. It's not contingent upon cash being received from the actual client. So once you perform a service or sell a product, you recognize revenue at that time. If they pay you cash, you increase your cash account. If they still owe you, increase account receivable. So once they perform services for cash or on account, we're still going to increase our revenue account. A few more. Number 8, paid $2,600 for rent expense. Again, paid $2,600 for rent expense. So because I'm making a payment, my cash account would decrease by $2,600. Let me change my format real quick. Keep it looking uniform. There we go. And in accounting, parentheses mean that number is negative. And my expenses are going to increase by $2,600. Now notice for the expenses, I made it positive, not negative. Because once we're done to get our total equity, we're going to add total capital plus total revenue, but then minus the total of our expenses. Let's do a few more to get to our total, shall we? All right. Number 9 said receive $2,500 in cash from credit client. So a client that owed us, now they're paying us $2,500, which means that, and my number 9, 10, 11, thank you. So for number 9, let me change a little bit so I can see everything. Oh, didn't want to do that, sorry. 1 second, I'm gonna freeze. Let's do it this way, freeze. There we go. So for number 9 again, receive $2,500 in cash from credit client. Your cash account will increase by $2,500, but account receivable is going to decrease by $2,500 because they owed us $3,650 initially. They just paid us $2,500, so we're going to see an increase in our cash account, but decrease in account receivable. 10, we paid $3,150 in cash for office supplies. So you're spending money. Cash would decrease by $3,150. You bought supplies. The supplies account are going to increase by $3,150. Now just recognize an error that I made on number 5. I'm wondering if you guys caught, no, not number 5, number 3. I'm looking at number 3. Hold on. Oh, no, I didn't. It's fine. Never mind. I couldn't see number 3. Okay. And then last one, number 11, says the owner withdrew $5,000 in cash for the personal expense. So now the owner is taking money out of the business. That's going to decrease their investment, which means it would decrease their capital account and their cash account. So I'll put minus $5,000 in my cash account and minus $5,000 in my capital account. Now recall when we define accounting, we have to record transactions. We've done that. Classify transactions. It's now time to summarize the transaction, determine what are the end results from all of our business transactions. So I now need to get totals for each of these accounts. Here we go. So these are the totals of the accounts at the end of the account equation. The account equation must show a total for each of our various accounts for cash, account receivable, supplies, as well as equipment. Let's get a total of our assets. We got cash plus account receivable plus supplies and equipment. So our assets total $45,250. For our liabilities, we only have one account, accounts payable. It equals $3,000. For our equity, we're going to add capital plus revenue, but minus our expenses. So we have total equity of $42,250. When I add my liabilities plus my equity, it has to equal my total assets, and it will. If you add those two together, both sides of the equation total $45,250. This is how you use the accounting equation to record a company's different types of business transactions.